Lululemon stock is down 16% after reporting earnings. The stock is down 44% year to date. It's been a terrible year for Lululemon shareholders. This is a stock that I've been covering sometimes on Saturdays. I know a lot of you guys are going to ask me about the company, so I decided to record a video and give you guys my thesis on Lululemon, if I believe this is a generational buying opportunity, or maybe Lululemon is still some kind of a trap and maybe we should remain away from the company. But in terms of the company's estimates, they actually beat on those estimates. They got $3.10 versus $2.88 expected. Massive beat on earnings per share. Revenues, they missed by like 10 million. It wasn't anything meaningful, but they did miss on revenue. Now, the bad part about the whole report is mainly same-store sales in the Americas. It was down 4%. This is a major trend change for a company like Lululemon. Overall comps were only up 1% versus 2.2% expected. Now, again, this is a major shift in trends because the company just a few quarters ago was putting up 30% in comp sales. It declined to 17, 13, 14, 12, 7, 3%, and now it's only 1%. Only 1%, and it could potentially go negative in the next quarter. So again, this is a major shift in trend from Lululemon, and that's why the stock is going down, and that's why the multiple have contracted so much. But the company, unfortunately, has also guided down in terms of the next quarter. They're expecting $2.18 to $2.23 versus $2.93 per share. So this is a massive downgrade on the estimates. Now, anytime I have comp sales declining so much and I have weakness from the Americas, I try to look at the geographical revenues in terms of a trend, and I try to determine if this is a one-time problem due to the weak consumers in the United States, or is it actually a company problem? And this is very important to look at. So if I look at the red, which is United States revenues, it's pretty much still the same from April of 2024. It's still the same. It hasn't gone up. It hasn't gone down. It's pretty much the same. Now, if you look at the China revenue went from 346 to 440. It has increased, not a lot, but it did increase. And it also increased quarter on quarter, which is very nice to see. In terms of Canada revenue, Canada has increased from 281 to 321 from April of 2024, and has also increased quarter on quarter, which is a positive sign. If I look at other geographical locations, which mean other regions, it increased from 240 to 326. So the trend in overall revenues have increased. United States customers is pretty much still the same in terms of sales like it was in April or July of 2024. So that pretty much tells me that yes, some of it has to do from the United States, because United States brands in general are facing problems locally, but it's also a company's problem. And I'm not the one that's saying that. The CEO himself, he's saying that. And he said, we have become too predictable within our casual offering and missed opportunities to create new trends. This is a very honest CEO, and I love that very much. He said, our lounge and social products offering have become stale and have not been resonating with the guest. And this is true. Lululemon hasn't innovated, hasn't started new trends in a while, pretty much since COVID kind of stuff, when a lot of those things went viral. And he's right. He's 100% right. Lululemon needs a lot of innovation, and it's facing a lot of competition from cheaper Chinese brands. They look the same. Maybe they even feel the same. And, it's just a lot of competition, and it's just the same thing. So Lululemon has to innovate. And the question is, will they be able to pull it off? And this is the biggest question. Now, the most important part about this outlook is it does not reflect potential future repurchases of the company's shares. And the company has been repurchasing stock, not a lot. They repurchase around 1 million shares every quarter, which is actually it's actually a lot. It's actually not bad. They repurchase around 1 million share almost every single quarter, and the company is in a very good position to continue purchasing shares, as they have $1.1 billion in cash and almost no debt other than lease liabilities and some kind of deferred tax liabilities. But in terms of actual long-term debt, they pretty much have no long-term debt, and they have $1.1 billion of cash, and they're still profitable, and they can afford to do a lot of buybacks, as the company's stock is trading around 14 times earnings. I mean, it was trading at 70 times in 2020. I told you guys there was a lot of excitement around Lululemon. It went from 70 times earnings to only 14 times earnings. And by the way, I'm using fiscal.ai to come up with the charts as the geographical locations. No other company has such capabilities. And if you want to try it out, they give you 2 weeks of free access if you use my link down below in the description. But 14 times earnings is extremely cheap for a company like Lululemon. In terms of the analyst expectations, they're expecting earnings per share growth to pick back up in fiscal year 2027 around 7%. And I agree with the analyst estimates. And I think we can all agree that 20-25% earnings per share growth years are long gone for Lululemon. I don't think Lululemon is going to see that again, unless they go viral on some kind of a new trend. But it's very, very hard to turn around a fashion-related kind of trend. It's very hard. And that's why I told you guys I like Lululemon. It looked undervalued. But the problem with those fashion kind of stocks and retail kind of stocks is you don't know what the next trend is going to be. And it could start out of some kind of a viral TikTok overnight. And everyone likes to copy each other. And they suddenly all want whatever the influencer is wearing. And then all of a sudden, Lulu is going to be losing business. So it's very hard to, it's very hard to compete in the space, and it's just extremely difficult in general. But Lululemon has been doing a good job, and I think the 2025 earnings per share growth years are behind them, and they will likely grow 7% earnings per share, 10%. If they do some buybacks, they grew low single digits in revenues. They can grow 7-8%. Now, 7-8% earnings per share growth at 14 times earnings, I believe this is actually fairly valued. I don't believe it's extremely undervalued. I don't believe it's the bargain of the century. I think if they can maintain 7-8% earnings per share growth, 14 PE relative to that is fairly cheap. Not cheap, but I would say, fairly valued to undervalued. But is it extremely undervalued relative to 7% earnings per share growth? I think it's not extremely undervalued. So if I look at Lululemon, I like it here. It's a good setup, especially relative to the market in general. But I would not bet on Lululemon going back to 26, 28 times earnings. I would not bet on Lululemon going back to 15-20% earnings per share growth. I mean, it's possible, but it's extremely difficult to do so in the fashion or retail-related space, unless maybe you have a new CEO and some kind of innovation, and then the trend picks up. And it's very hard right now from, competition on Temu and all those places. And I don't know where Shein and all those places where people order cheap stuff. So it's very hard, much more difficult than it was before. And, I like it. I mean, I see upside. I think, for example, it could deliver around 15% a year. I think 15% is achievable. But I think 14, 15 PE for 7% earnings per share growth is fairly valued to undervalued, but it's not extremely undervalued. So I like Lululemon here. I think it's presenting a good setup. Is it the bargain of the century? I don't think so. I think it's a good opportunity relative to the market, and I like it. And that's just my opinion on Lululemon. I might consider selling put options. To me, they would look interesting on Lululemon. But I like Lululemon. Looks really good. And that's my opinion on the company. Not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.